Welcome to the Nickles and Dimes Finding Financial Freedom podcast. I'm your host, Natalie Kime, and I look forward each and every week to bringing you amazing content that will provide you with a financial education, will support you on your financial journey, and most importantly, help you to find financial freedom. I hope you enjoy today's episode. If you listen to my shows recently, you've heard me talk a lot more about my parents and helping prepare them to continue living well in retirement. And I've really kind of zeroed in or honed in on my target audience better than ever recently. And honestly, my target client, the person I look to work with the most is somebody like me. They're in the sandwich generation, 10 to 20 years out from retirement, looking at their numbers, trying to make sure they're on track and be prepared for retirement the way that they want to live with dignity and financial freedom. But somebody who also may be caring for a loved one that is in retirement. And by caring for, I don't necessarily mean in the way I am, that they live with you or you live with them and actually provide hands-on care, but caring for them in the sense of emotional support or assisting with the financial aspects of retirement and the expenses that they may incur. So I'm going to speak to a lot of different topics. I'm definitely still going to be dialing into, budgeting, reducing debt, building wealth, and leaving a legacy like I always have. But I'm also going to touch a lot more on just things that surround retiring well for yourself and for your loved ones. So you'll see a lot more of that content coming out in the near future. But today I want to talk in depth about life insurance. Why? Because it is Life Insurance Awareness Month. September every year is a month that we focus on sharing more information, talking a lot more about what life insurance is, why we need it, who needs it, all that kind of stuff. And so I wanted to do an episode today where I really dive into that. There's a lot of different opinions out there about life insurance. A lot of people think, I'm too young, I don't need it yet, or it's too expensive, but they've never really taken the time to look at it, or do I really need it on my kids, or do I need term life for whole life? Like, those are all valid questions. And I hope to give you a little more information today to help with that. So let's jump in. I'm actually in my show notes, I'll put the link to an article that was put out by New York Life Insurance. And as I was doing some research and prepping for this, I have a ton of information and a ton of knowledge around life insurance, but I wanted to put it in a really organized way. And so I was looking at some information, some articles, some facts and figures and things like that about life insurance to really kind of touch on all the bases I was shooting for in this episode. And I came across this article, and it's called 6 Reasons Why You Should Consider Buying Life Insurance. And it's going to be the framework for my episode today. So I will put the link in the show notes, and I'll always also copy paste the information there as well. But it's just a really good overview on life insurance, what you should consider, who needs it, and all of that good stuff. And so I guess I should say thank you, New York Life, for giving me a great foundation for this episode. So let's start with the 6 reasons that you should buy life insurance, right? That's kind of going to be the gist of today's episode. Those reasons are different for everyone. But the truth is, at its core, deciding to get life insurance is about providing security to your family, to your loved ones, maybe to a business partner, right? If you have a business that you co-own with somebody, a lot of times people will buy life insurance to help protect their half of the business and their partner's half of the business, so that should something happen to either one of them, the livelihood of the other is not in jeopardy because of the loss of their partner. So in honesty, life insurance can cover a lot of gaps in life, provide a lot of different kinds of protections. It's really important. The number one reason I think for getting life insurance, the most important reason, is to protect your immediate family. So if you're married, if you have children, if you have a life partner, it's really to protect them from the financial struggle that they could incur in losing your income if something were to happen to you, right? So it's going to allow them to pay off debts if there are debts that exist. It may allow a spouse or a life partner the ability to take some extended time off work to really deal with the upheaval of life, the changes that they're going through without the stress of having to, you know, go to work right away and be concerned about their job needing to pay the bills. And it can help pay any final expenses. It can still help provide, if you have children in the home, provide or assist with their college education, the kind of things that you and your partner or spouse would have planned for if you were both still here. So it's going to provide financial support when your loved ones need it most, right? When and then and let me go in here too. Like life insurance is, larger lump sums for things to cover things like I just went over. But in addition to that, there are policies, smaller dollar policies that are considered final expense policies. So the difference between a final expense policy and a traditional life insurance policy, whether it's term or permanent, is going to be that this is usually a smaller sum of money, and it's a policy that's going to pay out pretty immediately on your death to help cover final expenses. That's why it's called final expense. It's going to cover funeral costs, casket, flowers, all of the arrangements and things like that. That is the kind of insurance that is really going to assist your family, so they don't have to um, issue a GoFundMe account or something like that to cover the immediate needs that they have financially. And the reason that that exists is because life insurance on average takes about 3 months to pay out upon someone's death. A death certificate has to be issued. And then there's just the processing of everything. And so it's not an immediate payout, but like, for example, I work with a company through my business called Everest, and they're backed by IA American, and they have a final expense policy that upon your passing, whoever you've designated can call in and let them know you've passed away, and within 48 hours that money will be transferred over to your loved one to cover all of those expenses. And within that policy, you can also set up what your wishes are for a funeral, burial, all those kind of things. Do you want to be buried? Do you want to be cremated? Do you want a big funeral? All those kind of things, right? So they're going to get that cash right away to cover that cost. And then the life insurance is going to pay out to give them that larger sum of money to help give them the kind of security that I already touched on a little bit. So let's kind of veer a little bit here and talk about the steps in the insurance buying process, right? So a lot of you out there, if you have a job working for somebody else, you have an employer, you may have employer provided group life insurance. So a lot of times your company will pay for this or pay a portion, and for a really minimal amount, you can add on additional coverage if you choose to. And so those policies are great, for sure. And they're a great enhancement or addition to whatever you might have personally. But I advise you to think about the fact, if that is all the life insurance that you have, what happens if you lose that job? What happens if later in life you lose that job or you choose to leave that job to start your own business? And now you have to provide your own insurance, and you may have some health issues that make life insurance more expensive at that age. You may have health issues that don't qualify you for life insurance at that age, or just by age alone, even if you are really healthy, life insurance could be or would be more expensive, say if you're in your 50s versus getting it in your 20s. And so something to think about there. I just like to raise that idea to make sure that you're sitting with a financial professional like myself who can help you assess what your needs are overall from a life insurance perspective and make sure you have the right amounts in place. So, number one, I was just kind of alluding to this, is determine your goals. How much life insurance do you need, and for how long? So, for example, um, I work with over 150 different providers in my business. But one of the biggest companies that I utilize when I can for life insurance is Transamerica. And it's because they include a lot of bells and whistles and extras at no or really low cost to some of their life insurance policies. So you do have the opportunity with Transamerica to get a plan that is going to provide a permanent life insurance for you, as well as allow you the ability to save, um, to build up cash, save retirement money tax free, that you have access to along the way. It's tax free when you access it in retirement. It just has a lot of great things. But in addition, you can add a base insured rider to those plans. So a base insured rider is a term insurance addition. So say we sat down and determined you needed $1 million, or based on your goals, $1 million was the right amount of life insurance for you. Well, to help keep costs low, we could do 500,000 in a permanent policy and the other 500,000 as a base insured rider for a period of time to get you to that full million. Now, when I say for a period of time, the reason that you might be in a situation where it's a period of time would be because you still have small children at home, you have a mortgage on your house, maybe your spouse is a stay-at-home parent, or whatever, right? So you want to provide enough life insurance to cover fully using or fully losing your income. So if you make $100,000 a year, the calculation that I use is you want 10 years of your income replaced by life insurance. So that would be $1 million. So just kind of a thought process there, that there are some products that allow you to do both permanent and term together. In the case like I just said, say, your kid, you've got small children that are still going to be home for another 15 years, and you've got 20 years left on your mortgage. You might want to go ahead and do a portion of your life insurance that helps cover that part of your income, that would provide for your kids and pay for the mortgage in a term policy, and you could add that to a permanent policy, for the 20 years. And once you get past that time, if your expenses and your family needs change, you could drop that term piece off and just keep the permanent insurance at that. So definitely, determining your goals, understanding how much you need, and working with a financial professional is going to help you figure out what exactly is the best setup for yourself or your family. Number two would be, what types of insurance can help you meet your needs? So do you need term insurance, permanent insurance? Do you need long-term care to provide, if you were to become disabled, if you were to become um, critically injured, or do you need coverage to cover if you were being diagnosed with cancer, a terminal illness, or something like that, where you couldn't work for a period of time? And so you'd want to be able to access your benefits while you're still living, which brings me to one of the things we say all the time is like, look, life insurance no longer is just if you live or if you die too soon. It's also if you live too long, because the older you get, the more of the chance of some of those health issues creeping up, and impacting yourself, your spouse, your family in some way. And so you have the protection on either side of that. Okay. So if either scenario were to happen. And then number three, consider the premium payments. Consider if it's a policy that the premium payments increase over time. The plans I work with do not. You get a one-time premium, and that's what it's going to be for the life of that product. So if you get a term policy for 20 years, that's going to be your payment every month for 20 years. Now, at that point, if you go to renew a term policy, the premium will go up because of the age difference alone. And then, of course, any other issues that may be of concern. So, and then again, like I talked about, living benefits are an important thing to have. And attaching living benefits to your life insurance is a lot less expensive than getting a standalone living benefit policy. So definitely want to understand what it is that you need, um, what types of insurance provide those needs, and what your premium is going to be, the possibility of that a premium increasing over the time, and the impact of that to your budget and finances. So what are allowing you to afford the best insurance you can. And of course, over time you can always add more insurance, right? If I meet with somebody in their 20s that's single right now, I'm going to put a policy in place that covers, I, let's just talk about my son, for example. He's 22 years old. So he has a $250,000 life insurance policy. He has no mortgage yet. He's not married and he doesn't have kids. But in a few years, he likely will have a mortgage at least, possibly be married, and maybe have children. At that point, he can always add on additional life insurance to cover those additional areas that he wants and needs to. So it's not, look, it's great to get life insurance while you're young because it's less expensive, but throughout life, and if you make more money over time, you may want to add some to that. You may want to make your plans a little more robust. So definitely working with a financial professional is going to help you determine that. Depending on cost, maybe you can put in a really strong life insurance when you're young, if that fits within your budget. And down the road, you may not need to add anything else. So again, that conversation with your financial professional is going to help you determine, what you need most. So let's kind of dive in now to the 6 reasons to buy life insurance. Like I said, so many people think I'm young, I don't need it. But you guys, if you watch the news, if you're on social media at all, you see all the time that, gosh, unfortunately, people die when they're really young. Sometimes you see that you have people you're connected to or family members who've lost a loved one that is still a child, or maybe in their 20s and 30s, right? They didn't plan not to be here tomorrow. But being protected, or put your family in a situation where they're protected, definitely is important. And can go a long way. And again, the younger you are when you do it, the more affordable it is. And so you kind of cross both those things off, and it's not something you have to look at or worry about as much in the future if you've already started yourself down that path. So, okay, so the 6 reasons to buy life insurance. Number 1, guaranteed protection. Okay, so I already talked about if you have a family, maybe a business, or other people who depend on you for some reason or in some way. An insurance benefit is a safety net for them, right? So when you die, your beneficiaries are going to receive a lump sum payment. It's going to be paid in full, as long as the policy is active and you've paid up all your premiums and there's no outstanding loans against your policy or anything like that. So definitely going to be guaranteed protection for your loved ones when they need it. The number 2 reason is income replacement, right? So if you suddenly disappeared, your income likely goes away as well. There are very few circumstances where that doesn't happen anymore. And so when I reference that, I think about like my dad, he has retirement from the military. My parents have some annuities that will continue to pay out a lifetime income to either parent should the other one die, because they set them up that way. So there are products that can fill in and solve that issue for you. But guarantee or excuse me, income replacement, it's going to replace your income, allow them to pay the mortgage, afford childcare, healthcare, tuition, college expenses, eliminate debt, just so that they have some more freedom and flexibility financially after losing you, and maybe preserve a business, like I mentioned earlier in this episode. So number 3, It's a tax-free benefit. So your beneficiaries are going to be able to enjoy 100% of everything you leave them, because the benefit of a life insurance policy is generally passed on tax-free. So, of course, it's going to depend on the product you get and the way that product is built by your financial professional. But definitely just a great way to leave a legacy to your family. Leave that safety net in place for them should they need it. Now, number 4, guaranteed cash value growth. So this is where you're going to look at whole life insurance that allows you to grow cash within the policy. So this is called an index universal life policy. Um, these policies, well, the ones I use are called index universal life policies, I should say. So this policy is going to allow you to put money into it. Now your money's going in after taxes, right? Because it got taxed in your paycheck. It's going to grow tax-free. And when you access it in retirement, you'll be pulling from that tax-free as well. Okay. So those policies have to be built to accommodate what you need and want to save over time, leading up to retirement, to make sure that you don't run into any taxable issues or whatever. But again, based on your goals and your needs, your financial professional can help make sure that those are set up the way you want. You could also look at a policy that lets you goodness sakes, lets you grow or allows you to grow cash value tax deferred. So these policies can end up being supplement retirement income, help fund a child or grandchild's education, pay off your mortgage down the road, protect existing assets, or be a way to establish an emergency fund. So it's a place you're saving money. You can get to it if you need to, but it's not an immediate just slapping down your debit card. You've got to think about the purchases you're going to use this money, but you do have the ability to access it if you needed to for a major expense or a major issue in your life. Number 5, dividend potential. So there are life insurance products that do allow you to receive dividends. They're not necessarily guaranteed, but when you do earn those, you can take them in cash. You can have it offset premiums, or you can buy additional insurance with them if that's something that you want. And then number 6 is optional riders. So there's several ways to tailor whole life policies and even some term policies to meet your needs. For an additional cost, you can get riders like long-term care or critical illness or terminal illness riders. Things that are going to cover the expenses if you are ever confined older in age. If, like I mentioned earlier, you were to be diagnosed with cancer or be disabled, in a severe accident or in something like that, to where you couldn't work for a period of time, or even if you were still able to work, you likely would have exorbitant medical expenses to pay. And so that money would be accessible for qualified situations like that, where you can access it while you're still alive, to protect you and your family, and provide for those additional expenses. So those are the 6 reasons to buy life insurance. And like I mentioned earlier, those optional riders are much more affordable when attached to a life insurance policy than when you try to buy them as individual policies. So definitely something to look at and think about there. Like I said, this is Life Insurance Awareness Month. And so as I wind this episode down, what I'm going to say, and I'm just going to be super direct. If you have somebody that depends on your income, it is your responsibility to protect them. I talk all the time to people about, and I'll use myself for an example. I have insurance on my cell phone. I have insurance on my car. I have insurance on my house. Okay, well, more important than any of those things is my life. So why would I not have insurance on my life in general? But in addition to that, in getting insurance on my life, why would I not take the time to make sure that I have set my family up for success if the unplanned loss of my income were to occur because I was to die or experience severe illness or severe injury at some point in the future. I truly believe it is every person's responsibility to protect their family from having to um, deal with their debt once they're gone. If you're married and your spouse is a stay-at-home parent, um, if all of a sudden they had to get a job to pay the bills, how are they going to pay for the care of your kids, right? But if you have the proper life insurance policy set up, they may be in a position that they can finish raising your kids and still stay at home because you set that up and you put that in place to protect them and provide the best care for your family in your absence. And if nothing else, provide to bring somebody in to give support care and replace you. You might be the one who is the stay-at-home parent, or you might just work part-time, or who knows what, but still replacing your income so that they can maintain the lifestyle that they're used to, that they're accustomed to, continue living out those dreams and goals that the two of you had together, even in your absence, rather than carry the burdens and stress of being strapped financially. So, like I said, lots of different reasons to look at it. For me, as a single mom and rebuilding my career over the years after I was laid off 3 times in 2.5 years post 2008, I really had to rebuild my career. And in between those jobs during that time, I didn't have life insurance because my employer didn't provide it. And I didn't understand the risk um, that I was exposing my son to because I was a single parent, right? Now, yes, he would have went to live with his dad and all of that, but how much better would he have been off had something happened to me and there was money to continue to provide the kind of life I wanted him to live. And like I said, I've set my son up at 22 years old. He's got a life insurance in place to cover some things. My son has a younger half sister that has Down syndrome, and she's very high functioning, absolutely adorable. Who knows what the future brings if she'll be in a position to ever completely live independently on her own. Um, but it's very important to my son that she is a beneficiary of a portion of his life insurance to make sure that she's provided for and taken care of um, in the future. Should something happen to their parents, should something happen to um, my son or his younger brother as well. Um, and she would need somebody to step in and the finances to cover her needs. So there's a lot of different situations you could find yourself in that life insurance just can be an easy answer to. And like I said, it's incredibly affordable. I ran a quote for a client of mine the other day. Uh, 48 or 49 years old for a 20-year, $250,000 life insurance policy, um, was around 35 to $40 a month. So think about, if you're in your 20s, my son, the policy we have on him is whole life. Now we may look at he has had additional coverage being in the military. He's in the process of separating from the military now. So just like one of us, he's now going to lose his employer provided life insurance. So we may look at putting a term in place or maybe another whole life policy to expand that amount a little bit more. But for him, a term policy, 30 years, even up to $1 million would probably cost somewhere in $20 to $30 range for a 22-year-old that's healthy. So to combat that argument or that thought of life insurance is really expensive, y'all, it's not. It's not expensive. And the time to buy life insurance is now. For me, when I stepped into this world of financial services and I realized the importance of a lot of things, I was 46 years old. And, as I'm still working towards building my retirement exactly where I want, the first thing I realized is that I need life insurance. I need it to have, riders that can provide for me in different situations in the future so my son doesn't have to carry that financial burden. But man, I thought, gosh, if I'd have known this 20 years ago or 30 years ago, when I'd just gotten out of college or was newly married, how much less expensive could it have been? None of us can go back. Yeah, we can't go back and fix what we didn't do, but even, you know, um in your middle-aged years, in your late 40s, life insurance is still it can be very inexpensive, especially compared to, other things that you spend your money on, an expensive car, vacations, things like that. It's not that you shouldn't do those things anymore, but budget in life insurance so that you can enjoy life knowing that God forbid something happens to you or a loved one, they're still going to be taken care of, or you're still going to be taken care of. And I do also recommend that you have life insurance policies in place for your children. Um, even when they're small, for a very affordable cost, you can put a whole life insurance policy in place, and also utilize it as an avenue to save for their college. And then if they don't go to college, it can help pay for a wedding. It can help be a down payment on a house, or it's an account that they can take over and continue adding to just be well on their way to being prepared the way they want for retirement. So I hope the information I shared with you today was beneficial. Like I said, I'm going to copy paste the article itself in my show notes, but also the link to it. I want to make sure and give credit where it's due. This was a New York Life article. And while I don't personally work for and with New York Life, I just felt like it touched on the topic that I wanted to cover today of life insurance really, really well. And so I'm grateful that there's so many companies out there that provide great information. And as always, if you have questions, please reach out to me. I'd love to talk to you. I'd love to help you out. Even if it's just, some questions and answers, you want to look at policies you have and see if they're sufficient or anything like that. My contact information is always in the show notes, but real quick, you can always reach me on Facebook or Instagram at Natalie McPhie, MCPHIE, Kime, K as in kilo, I, M as in Mary, E as in Edward. And you can email me at natalie.kime@wealthwave.com. So I look forward to sharing more information with you in the future, possibly talking to you at some point and helping you answer any questions that you have. Thank you guys for joining me today. I'm your host, Natalie Kime, and I look forward to continuing to bring you amazing content each week that will stretch both your mind and your financial future. We'll see you again next week.